Hello guys, hello and welcome to the 80th edition of the Trading Opportunities webinar. This is Nirav and give me a few moments while I check the audio at my end. And of course, if you are live with me, you can also let me know in the comment section, chat section, sorry. All right, so the audio is working fine at my end. Live chat, there you go. Okay, so guys, let's in that case begin with the legalese legalities, whatever. So here is the quick disclaimer on screen suggesting all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any such purposes, you yourselves will be liable for your profit, your loss, and loss of profit. With that out of the way, let me just give you a very quick introduction. So, guys, as you know, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis website as well as the 50 Eyes Market Analysis YouTube channel, where this broadcast is currently being done live alongside LinkedIn, which is the second place where we are broadcasting live. Right. So far we have done 79 of these trading opportunities webinars, as you can see over here in the live section on YouTube. Out of those 79 webinars, in the last 78 webinars, we have kept. Sorry, I have also checked the 79. So in total, till the 79th webinar, we have captured 128 trades. I'm talking, excuse me, I'm talking about the big moves, by the way. And we do these webinars every Friday at 2 p.m. GMT, 7:30 p.m. IST. Right. So just convert it in the time zone you are in. Right. And before we move further, a few more things. I'm also the author of the book Think with the Markets, which can be found on Kindle platform of Amazon. And lastly, I've been doing this for a good deal of time, and I have compiled or kept a track record of all the things I have done on YouTube here with the videos and webinars. This is the accuracy so far. The accuracy basically is the name of the instrument. Let me just clarify date and the analysis and if it worked out or not. So far we have since 2016 above 80%, as you can see yourselves, and 2022 2023 we are just doing weekly, so you can check them for yourselves in the trading opportunities webinars under live section in YouTube channel. Right, with that out of the way, now let's head over to our actual analysis. Yes, one last thing. The way we will proceed with this webinar is, for those of you who are new here, that we will first cover EURUSD, followed by crude oil, followed by gold, S&P, and then Nifty, and at the end we will cover Bitcoin. Right. So now let's begin with our actual webinar content. First of all, we have the chart of Euro USD on screen here, and we have been one thing I just wanted to point out: all the discussions we did in the last webinar, the first September webinar, literally all the setups played out and worked out as expected. So in last September webinar, we had a second scenario or a secondary hypothesis which was suggesting downward movement, if I recall correctly. One second. Yes. So our secondary scenario was downward movement. The primary scenario was that if the high is taken out, we will look for one more leg up. But that did not play out. The second scenario was that I think it was somewhere around here, the trigger. So I will have to exactly check. Then if we are taking this out, then we will be looking for this level 1.07650, roughly speaking. Right. So that was the discussion in last webinar. And as we can see, it already went there, touched the target, and went even lower. Of course, personally, I have been updating all my analysis in the Slack group, and we were also able to capture some trades here and there on Euro, more specifically on the short side. And let's now quickly look at what the scenario currently is. So currently, what I'm expecting is, let me just get more data on screen. So what I'm thinking is that this whole correction, possible X here and then the Y. Now, basically, what I'm talking about here is WXY correction, which will look something like this if I draw it on the rough side, right? And in WXY correction, the wave X can go more sideways than just forming a simple zigzag kind of structure like this. So that is one possibility which we have to consider, and that possibility suggesting that this X perhaps is continuing sideways. So what that would mean is that this market can go back within this box range and then come down for the wave. Right? So that is the main idea that we have to keep in mind on this counter of Euro USD. Overall, my bias remains to the short side, right? So if the market does do this, that is, if it does go back within the sideways region, which is 1.077 and 1.094, then I will look for possible reversal levels and a clear reversal basically to try and trade the downside like this, right? Second and a little less likely scenario is that this market may have already done the X here and perhaps it is just about to complete the Y with one more small down leg, or it is already complete here. So we are interested in this one. If it's already complete here, then the reversal will not happen. So currently it is low probability because our downside target is currently set at 1.06366. So since the target has not been achieved and not even achieved, it hasn't even gone near to it to suggest anything like that. So we are of the belief that this market is most likely going to go like this. Minor upward movement, which should be followed by a downward movement, which should take out the low of 1.0686 and then go to the target of 1.0666. So that's our main view on Euro USD. Looking for sell setup within the marked zone, and we have already discussed the targets. So with that, I think we should now move on to crude oil. Unless those of you who are live in the webinar have some doubt, they can always push it in the chat. Crude oil. This one is also the thumbnail of this webinar, the 88th Trading Opportunities webinar. And I was long on it, like 30-40 minutes before the webinar and booked out with minor profits. So I'll just quickly discuss the CL trade here. Let me just pull out my Slack so I can just show what the hell the trade was. So there it is. So here on Slack, you can see we are in the crude oil channel. So this was a trade, long trade executed around 87.282. And the idea was that this market has completed a wave 4 like this. And if the wave 4 complete, it should now head higher and take out the last highs at least. At least take out these highs basically. So we went long at 87.28. And later on, I had to cover the longs with very minute profits around 87.5 something, roughly speaking, 87.55 or something like that. I had to cover. The reason was that this wave 4 was a little bigger than expected, so I did not want to hold down the whole thing. So that was a quick trade on crude oil. And those of you not aware, this Slack group, you can request access to it by asking for details via our contact us page, and I'll provide all the requirements, fee structures, etc. So you can head over to 50s.com/contact us if you are interested in becoming a part of the membership. Now let's head over to our current take on crude oil. So currently, what is happening here is that the idea is still playing out fine, although the counts they need to be adjusted a little bit. So what we'll do is I'll remove this. So this is the current projection which I think this market might be playing out with. Basically, I'm still expecting an upward movement, possibly as an impulse, right? And the idea is still the same that this market should take out the minimum level of 88.3. Let me just mark them down. 88.3 followed by second minimum target 88.8. Right. So we have above targets, etc., but that doesn't really matter. I'm not going to project those targets because anything above this we will hold by trailing the market instead of using what you call target levels for exit. Now, with that being said, the way to play it is I'll look for re-entry to the longs or the upside, basically above the wave one high, which is currently placed at 87.887. So if the market takes that out, I will add minor longs because there is a possibility that this wave two might still be continuing. But I will add longs nevertheless because I think it has given enough sideways movement and it may just shoot up as well. So keeping that in mind, as very simple setup, long above wave one high and targets are just most recent later recent high. Right. So that is our setup on crude. Maybe it will get triggered while we are doing the webinar, maybe a little bit later. But that's what I'll be looking to trade this thing, or this is how I'll be looking to trade this thing, longs. Now, with that being said, I don't think there's anything else to add here. So let's now head over to our chart of gold. And just before we proceed, if you are hearing me live or afterwards, make sure you hit the like button on YouTube and definitely share it with your friends and colleagues who are into trading and will find it useful or helpful because we definitely need more views. So that was it for crude. Let's head over to our discussion on gold and let's see how it's going. So gold, let me just quickly show you what the whole picture really is, like the little bit of the bigger picture view here by removing everything here. Just give me a second. Yes, so what I was saying was in gold on the little bit higher time frame, let's say 4 hour, what we are seeing here is a corrective continuation to the downside. Right, and that corrective continuation is currently sideways within this range, right? So we do see a little bit of an attempt to take out the lows, but it went back within the range again. So the idea I basically have is that we have the A here, possibly the B here, or the B is continuing sideways, but eventually we are expecting a downward movement on this counter, right? So let's see that in a little bit more detail on, let's say, an hourly chart. One of the few possibilities, E continuing sideways as a triangle. And this is the wave A of the triangle, the B of the triangle, the C. Those of you not familiar, the triangle should have 5 legs, basically something like this. And once this wave E is complete, it should give a downward movement. So perhaps it's a triangle, perhaps not. It can be counted in a little bit varied fashion, so I'm not going to comment too much on it. What I can see though here is that even if it's a triangle, the wave D down is still remaining. Our overall bias is also to the downside. So what I'll be interested in is taking shorts below 1916 level, right? And I like to hold those shorts for targets. Actually, the targets are not very big. 1910 followed by 1900. So that's my current plan. Of course, if things change, I will update them in Slack. But currently, this is exactly what I'm thinking here. The only thing which I am seeing here, which can go differently, is that this whole correction, the ABC leg down, which we are talking about from here, from this point of reference around the price of 2080 something, it is possible that this whole thing has already completed here. This was the A, this was the B, and this is the C complete. Now that is a low probability scenario, first of all, because I do not see a very clear count in this. It definitely looks corrective because it is sideways, choppy, overlapping. So I'm not going to assume that that's just a low probability scenario. That leads us to our clear downside bias, right? So with the targets and entry, I think we have a clear understanding of this chart and the counts. And one thing, as I was mentioning, all the 6 setups or all the charts that we discussed in the last webinar played out, which included gold on the 1st September webinar, which was the last webinar or the 79th trading opportunities webinar. Gold was trading somewhere here, and the whole setup was that it should go lower. So again, I would suggest that you yourselves go and check out the 79th webinar by heading over to the YouTube channel. But this is just for summary purpose. We were here, and the idea was, or my primary idea was that I'm looking for sell off, and we also discussed detailed setups and everything. But long story short, the idea was we were looking for sell off, and which is what happened. So that's it for gold. And again, guys, if you are liking the content, do not forget to hit like. And of course, once the webinar is complete, share it with your friends and colleagues. That was our trade on gold. And now let's head over to S&P, which again moved as expected or as discussed in our last webinar. Where were we? Now let's first quickly check what was the idea in the last webinar and how things proceeded. Did they proceed accordingly, and so on and so forth. So first of all, S&P we have on screen. What we have is 1st September somewhere. Yeah, there it is, 1st September. So this is where the last discussion was. Again, the idea was of the fact that it will go lower, or the setup was on the downside. Although I have changed the counts a little bit. I'm using a diagonal here. Previously, we were looking at is at this and different structure, but that doesn't really matter at this point. So now let's head over to our current discussion. Current discussion, we are of the view that first let's discuss the bullish count here. Let me check one thing very quickly here. Fifth here, correction down and then upside. Yes, there it is. So we will look at this chart from this point of reference, which is at 4337. And from this point of reference, we are first discussing the bullish outlook. So in the bullish outlook, the count is that we have a wave 1 up, 2 complete, and then a nested impulse is underway. So let me just explain that in the rough right hand area. So the bullish count is suggesting that we have wave 1 up of the impulse, 2 down, and then 3, 4, 5. This is just the basic progression of an impulse in the upward direction. That's just plotting it here for the sake of comparison with the actual chart. Now in the actual chart, I am marking the 1 here and the 2 here, and then this 3. If you magnify this 3 wave, because of the fractal nature of Elliott wave structures or market structures, you will five waves again inside of it, which we can label as a dot 1, let's say, and a dot 2 and a dot 3, and so on and so forth. So with that being said, we are currently in the dot 1, and the dot 2 is either complete or still continuing. Now let's now look at that. I have already counted this as an A down, B up, and by the way, we have traded sell positions on this counter as well. Probably we'll look at it after this discussion. So now let's look at the current idea. The current idea is that wave 5 may have one leg down remaining, but I think I will need to update it real quick. Let me just check a few things. So see, the thing is that perhaps we need to readjust the whole situation. Maybe the 4 was here and the 5th is already complete, right? The idea was that one leg down is remaining because we had not touched the lower part of the target, which was 4425, right? But again, it was very close. It went almost to 4430. So it's not really required to. So now the idea becomes that possibly the wave 2 is complete. If the wave 2 is complete, then we will be looking for long once the market establishes itself above this PN color trend line. That is, the price goes above this trend line and then maybe pulls back and takes support on it, right? Which is the most ideal scenario we look for correction in three wave. So if something like that happens, then I'll be interested in longs very much, right? And the most ideal scenario will be wave up and then a correction testing the support level or the this trend line, right? So that's the ideal scenario we are looking for. Overall, long story short, the bullish bias suggests we wait for the market to establish above the parallel channel. And a very conservative view would be to wait for the market to take out the high of 4537. So in case you are like looking for confirmation, then this will be the confirmation level 4537 plus levels, that is higher than 4537 level, is where we expect new longs to enter the market. Although generally what happens is either it's a strong breakout or the market corrects at these obvious levels and then goes up. So this is our quick outlook on the bullish. Let me just place an alert here first. This is a quick outlook on the bullish setup we have on S&P. But again, this needs to be kept in mind that this market, let me just show you here, the second chart we have, this market may very well be remaining sidebound or sideways, whatever you would call it, within this huge range of 43.37 to 46.15. And it is possible that within that range, we are forming another range here. So long story short, what I'm trying to say is that even if we take longs, I'm not expecting a very huge target. Somewhere around 4500 or actually 4495-ish level I'm only expecting. So these will be mostly short-term trades unless the market does something very clear. I'll be only interested in longs in a shorter time frame perspective, intraday or maybe a day hold or something like that. Just wanted to make that clear. With that being said, I think we have covered all the long possibilities, and as far as the counter view goes, if the market is going to go lower, then we will look at it after it goes lower than 44.25. As long as it is staying above it, I don't see any reason to consider the bearish scenarios with the extreme caution or detail, right? So as long as it stays above 44.25, we will be looking for bullish scenarios and bullish scenarios only. And let me see if we can quickly head over and see a trade which we pulled on S&P's 500. So multiple trades on S&P 500. I'll just show you the yesterday trade. Beginning for impulse continuation, wait and watch for now. This was yesterday, as you can see here, added shorts. Shorts were added at price level 4446 and target is 4433. And very immediately the target was hit. It was good 14, 15 points something. Target hit, booked profits on shorts 4446 to 4432 something. So that was also one of the quick trades we did on S&P. And obviously, as I mentioned, I am posting all my trades in the Slack. And those of you who are not familiar, you can request details on how to become a member by heading to 50as.com/contact us and subject matter details for Slack private group. It is only request basis. So that's about it for our discussions on S&P. Now let's head over to our next chart, Nifty 50, which will be followed by BTC. Now Nifty 50, our view was that we cannot relegate the bearish scenario as long as the market remains below 19,585 level. I recall it very clearly. This was the peak I was using as a reference. So that was the study or the analysis on 1st September or discussed in the 1st September webinar, basically over here. Afterwards, what happened is quite clear. The market opened gapped up in the next session or Monday of this week, and it then tried to challenge this level, as you can see, and then tried again and failed, and then it tried again, and then there was a minor move downward. So almost you can say 3 attempts, after which it did manage to cross. So this was the trigger for upside. Long story short, we were thinking of the market going higher if it goes and sustains above 19,584, and it did exactly that. So that basically makes this count or this analysis also play out perfectly, right? So that was our last week's discussion, which had played out. Now let's look at what is going on right now. Before we even discuss the right now count, let's look at this level. Where is it? 19,930, let's say. This is a major resistance. I have it marked for quite some time. I'll just type it down. So previously what happened at 19,930, let's check. There it is. The market did go above it. 28th July. Let me check again. Yes, 28th July. Last 1 hour. For only last 1 hour, the market was able to sustain above it. Then it gapped down. So clear rejection. This level is of major importance. The market has basically clarified it to us on 20th July's price action, right? So now keeping that in mind, now let's head back to our analysis of the current data. So currently what we have here is the move starting from 19,223. Let's call this our point of reference, which will be our starting point or the starting point of this analysis. From here on, what we have is a possible wave 1, 2, and then this is heading up for 3. Now the thing is that 1, 2, and 3 can also be counted as an zigzag up or as an A up, B down, and C up. We cannot make much of a distinction here. There are ways to make some distinctions, but those are not 100% methods. So why am I projecting the secondary view? The secondary view is being projected because if this is heading up as an A up, B down, and C up, that is if this is an A not a 1 and B not a 2, then it is possible that the market will go lower from here. That is super bearish view. Now this is further supported if the market does not cross 19,930, I'll just write that again. So if the market sustains below 19,930, right below 19,930 and below this trend line, that is the price goes below this trend line, takes support here and then starts to go lower, then and then only I'll be interested in considering the super bearish scenario as a serious possibility, right? Until it does not do that, minor movement, sideways movement is expected, and we will look at it right now as well. But what will happen after that sideways movement is another leg in the upward direction. So, long story short, what is happening right now is that we do have a upward movement going on, but we do not have a clear buy signal because currently it looks like we may have just completed a wave C here and not a 3, right? So we need to have a clear confirmation of it. The confirmation of it, as I just mentioned, would be if the market goes sideways here, right, and then goes up or basically takes out the high. Now let's see how much more the market can go lower here before raising red flags. So I have the levels already marked out. Let's see what these levels are. So around 19,790 and 19,740. So within these levels, if the market is going lower, if it is going till 19,740 and then going sideways, it's all right. I will not consider this as a what you call a red flag or a sign for extreme bearishness. But if it sustains below 19,740, that is below this line, then we will have to consider the bearish possibilities, which I just discussed, can take this market much, much lower. So I think that about does it. What we will look for now is sideways movement within this range, 19,790. Either it will take support there or 19,740-ish level, and then we will look for break, something like this, roughly speaking. Something like this is what we are looking for. That's about it, guys. I think there's not much to add here on Nifty. And of course, do keep the higher time frame resistance in mind, which has also been verified by price action. With that being said, let's now head over to our last chart of Bitcoin. Again, in Bitcoin, also, we were discussing in the last webinar, which was done on 1st of September 2023, that we have a downward scenario or a bearish outlook. Now, let's just quickly check that on chart. Where is 1st September? So, 1st September is somewhere here. Oh, actually, I remember it. This trade was triggered right, either right during the webinar or right near the end of it. I did enter it as well. So head over to one hour chart to see it in more detail. So 1st September, yeah, somewhere here the market was when we were discussing it, right? And the idea was that it should take out this low minimum, of course, and a little wider downside target was also there. I recall I exited with only minor profits, but yes, I was able to capture part of this leg down. That was our quick view or a quick short-term trade, which we discussed in the last webinar and which played out, by the way. Again, if you are joining these webinars or watching this webinar for the first time, we go live every Friday. And you can check the past webinars by heading to my YouTube channel, 50 Eyes Market Analysis, and heading to the live section. These analyses are all time-stamped. So you can check what I said in the last webinar by clicking here and then scrolling through the time bar. Actually, I should just show you what I mean, or whatever they call it. Yeah, these blocks. Then so you can just scroll over here, and last one here is Bitcoin short trade setup discussed. around 42.28. So that's what happened, or what we discussed last time, and which played out. Now let's see what's going on right now. It looks like we have an A down, a B up, and perhaps a C down incoming. And the problem is here, which is quite clear, is this zone has seen extremely good. You can see, what, just highlighted like this. Look at the spikes over and over again. 1, 2, 3, 4, 5. 5 times the market has tried to break lower and has failed. That is also the reason I am hesitating to enter shorts right away, even though my count is suggesting bearish movement, right? So, what is the count? Let's have a look. So, the current count on BTC from this point of reference around 31,787 is, let's go with the impulsive view first. That's the rough outlook. So the thing is that if the wave 4 is complete here, then this market has already given the fifth leg down. I know it has gone down by, I think, a few points only, maybe 1 or 2 points or 10 points or whatever, but it can be said that this wave 5 is done. However, what the likely view is that this wave 4 is continuing sideways, right? After which it will now go lower. So what the problem is here, that the sideways movement, it can just take as much time as it wants. You can see here as well, the market was sideways for a good deal of time. More specifically speaking, we can just check it actually. "21 days", and so far it has been 19 days. And the second thing to note here is that wave 4s generally take more time. Generally speaking, not a definition or anything, just an observation. Wave 4 will generally take more time compared to 2. So that's why I am not very interested in adding shorts, even though it does look like it's just gonna go and fall down. So what is going to happen if it does not fall down straight away is that it will go sideways within this range and form a complex correction, which is generally something you can see in crude, sorry, not crude, BTC a lot. So that's why it's a wait and watch scenario. And even if it goes sideways, the second problem is arising here, that we have multiple spikes here. So best scenario here would be if the market goes somewhere in the upper side of this sideways movement or sideways range, sorry. So if it goes somewhere around 26,950, 60 something level, we can then look for a reversal sign, and then the stop loss will be small. And even the internal move, that is the lower part of the whole sideways band or zone itself, will give us a good target. So that's the idea here, that if we can catch a reversal somewhere in the upper part of, by the upper part I basically mean, if we have a 50% line here in the zone, then somewhere within this part, if we get a reversal, we can look to sell it and take profits or continue holding some positions, like let's say book partial profits here, then partially here, and so on and so forth. So that's the idea on BTC. We will wait and watch out for or look out for possible sell setups. But as of now, I will not recommend much of anything on this counter because of the reasons discussed herein. Right, guys. So with that being said, I would say that we have discussed all the main things we come here to discuss. And if you are watching this live or as a recording, I would again request you to hit the like button and share it with your friends, colleagues in your Discord, Slack, WhatsApp groups of traders, so that we can get more and more people on board and I can produce more quality content for you guys on YouTube. Right. With that being said, I think I'll close the webinar now. And yes, one last thing. Next week, I will not be possibly able to do the Friday webinar because I will be most likely out of town, right? I may pick up the markets on Sunday perhaps and release a webinar later on. But just keep in mind that next week there might either be a delay or no webinar. So that's about it for this one. And I'll see you guys in the next one. Bye.